If you are 65 or older, 5 things already changed this August. And most seniors have no idea any of it happened. 1 touched your Social Security payment before you even woke up this morning. 1 is a letter sitting in your mailbox right now that could quietly cut what you pay for. 1 is a tax deduction that thousands of people are already misunderstanding in a way that could cost them money in April. And 2 of them are breaking news. Changes to Medicare that were confirmed just days ago and could affect your doctor, your pharmacy, and your monthly bill in 2027. I dug through every SSA notice, every CMS announcement, and every credible report so you do not have to. Stay with me, because the last change is the one almost nobody is talking about yet, and it is already moving. Before we get into today's 5 changes, welcome back to Robert Preston Updates. This channel exists for one reason: to make sure you are never the last person to find out about something that affects your money. No confusing government letters, no guessing. Just the facts, explained the way a friend would explain them to you over coffee. If that sounds like something you need, hit subscribe and turn on the bell right now, because what I am about to show you could already be happening to you without your knowledge. Let's get into it. Let's start with the first change, because out of everything we're covering today, this is the one that is going to hit the most people first, and most of them will not understand why. If you receive Supplemental Security Income, also called SSI, you are used to your payment landing on the first of the month. It has worked that way for years. You do not even think about it anymore. It just happens, like clockwork, every single month, without fail. Now picture a retiree named Dorothy. She is 71 years old, living in a small apartment outside Tampa, Florida. Dorothy has received SSI for almost 10 years. Every single month, her payment lands on the first. She pays her rent a few days later. Her entire budget, every bill, every due date, is built around that one rhythm. Now imagine Dorothy opening her banking app on August 1st, the way she has done for 10 straight years, and seeing nothing. No deposit, no notification. Just the same balance from yesterday. Her stomach drops. This has never happened before, not once. Her first thought is not going to be, "This is probably just a scheduling thing." Her first thought is going to be, fear. Did something happen to my case? Did I lose my benefits? Did I do something wrong without even knowing it? Here is what actually happened, and it has nothing to do with anything Dorothy did. August 1st, 2026, falls on a Saturday. And when the first of the month lands on a weekend, the Social Security Administration does not wait until Monday to pay people. They move the payment earlier, to the last business day before the weekend. That means Dorothy's August SSI payment already landed on Friday, July 31st, a full day before she even checked her account. So if Dorothy is only watching for a payment on August 1st, she is going to believe it never came. In reality, it already arrived. And here is the part that trips up even more people. Because that payment moved into July, there is no separate SSI deposit landing anywhere inside the actual calendar month of August this year. None. To someone who does not know this ahead of time, it is going to feel exactly like a payment vanished into thin air. Now, this only applies to SSI. If you receive regular Social Security retirement benefits, your schedule works differently. Those payments are based on your birth date, and for August 2026, they land on 3 separate Wednesdays. If your birthday falls between the 1st and the 10th, your payment is scheduled for August 12th. Between the 11th and the 20th, it lands August 19th. And between the 21st and the 31st, it lands August 26th. If you started collecting Social Security before May of 1997, or if you receive both Social Security and SSI, your payment is scheduled for August 3rd instead. Here is exactly what I want you to do, and I want you to do it today, not this weekend. Open your My Social Security or My SSI account right now. Look at your actual payment history. Confirm what landed on July 31st. Then write your real payment dates on a calendar for the rest of the year, every month, so you are never caught off guard again. There is one more thing worth understanding, because it explains why this keeps happening every few years. Your payment schedule is not fixed in stone every single month. It shifts around weekends and federal holidays, quietly, with zero warning letter, zero phone call, zero notification. Most years, that shift barely gets noticed. But 2026 happens to be a year where the shift lines up in a way that makes it look, at first glance, like your money simply disappeared. It did not disappear. It moved. And once you understand that pattern, every future shift becomes something you expect instead of something that terrifies you. But this is where the story changes. Because the payment date shuffle is not the only quiet change happening this August. There is a second one, and this one is even more dangerous. Because it does not show up as a missing deposit. It shows up as a letter that thousands of seniors are going to throw straight into the trash without opening. So what exactly is this update? And why do so many people never even find out about it until it is already too late? Let's break it down in simple terms. If you are on Medicare and you take prescription drugs, there is a program called Extra Help, sometimes called the Low-Income Subsidy. This program can dramatically lower what you pay for your Part D prescription drug plan. We are talking about paying just a few dollars for medications that would otherwise cost you $50, $80, even $100. For 2026, if you qualify, you may pay as little as $5.10 for a generic medication, and no more than $12.65 for a brand-name drug. For a lot of seniors living on a fixed income, this program is the entire difference between filling a prescription and cutting a pill in half to make it last longer. Here is what almost nobody tells you about Extra Help. It is not something you qualify for once and then keep forever automatically. If your eligibility was based on your income and resources, and not something more permanent like full Medicaid coverage, the Social Security Administration reviews certain cases periodically to make sure people still qualify. And these reviews are typically conducted around the end of August every single year. Right now, this month. Let me tell you about a retiree named Walter. He is 74 years old, lives outside Columbus, Ohio, and has relied on Extra Help for the past 4 years to cover his blood pressure and cholesterol medications. Without it, those 2 prescriptions alone would cost him more than $180 a month. With Extra Help, he pays a small fraction of that. Last year, around late August, a letter arrived at Walter's apartment. It was from the Social Security Administration, asking him to confirm some details about his income and resources. Walter looked at the envelope, assumed it was just another piece of junk mail about Medicare plans, and set it aside on the kitchen counter. Weeks passed. He forgot about it entirely. Life got in the way it does for all of us. A few months later, Walter went to pick up his prescriptions, and the pharmacist told him the price had changed. Instead of a few dollars, his cholesterol medication was now costing him nearly $50 for the same 30-day supply. Walter assumed it was a mistake. It was not. Because he never responded to that review letter, his Extra Help had been reduced. Nobody called him. Nobody warned him it was about to happen. The letter had explained everything. The letter just went unopened. Here is the part that should really get your attention. If you are selected for one of these reviews, you generally have about 30 days to respond once the notice arrives. 30 days. That is not much time at all if the letter sits unopened on your kitchen counter for even 2 or 3 weeks. So here is what I want you to do. The second you see anything from the Social Security Administration this month, open it the same day it arrives. No exceptions. Read it carefully. And if it asks you to confirm your income or resources, respond before the deadline listed, not a week later, not when you get around to it. And if you are not currently receiving Extra Help, but think you might qualify, do not wait for a letter that may never come. Reach out to Social Security yourself and ask directly. This program does not advertise itself. Most people who miss out are not ineligible. They simply never ask the question. There is another wrinkle worth knowing about, and it is one almost nobody warns you about. Some people who automatically qualified for Extra Help in past years because of certain Medicaid or benefit statuses may find that automatic status has quietly expired. If that happens to you, a simple review is not enough. You may actually need to file a brand new application to keep your coverage going into next year. That is a completely different process than just confirming a form. So when you open that letter, read it closely enough to know exactly which situation applies to you. Walter's story is proof that the letter itself was never the real problem. What cost him money was what happened after the letter sat there, unopened, ignored, forgotten. Now comes the part most people miss. Because the next update involves your taxes. And if there is one thing I have learned from making these videos every single week, it is that tax-related changes cause more confusion and more expensive mistakes than almost anything else we cover on this channel. So what exactly is this new deduction, and why are so many seniors already getting it wrong? Here's what you need to know. Starting with the 2025 tax year and continuing through 2028, there is a new temporary deduction available specifically for taxpayers who are 65 or older. Depending on your income, this deduction can be worth up to $6,000 for an individual, or up to $12,000 for a married couple who both qualify and file jointly. This is separate from the regular standard deduction you already receive. In simple terms, it is extra room that can lower how much of your income actually gets taxed. Now here is exactly where the confusion starts. And this is precisely what happened to a retiree named Carol from a small town in North Carolina. Carol heard about this new senior deduction from a neighbor last year. The way it was described to her made it sound like a straight-up gift, almost like the government was simply going to hand her $6,000 extra. Based on that assumption, Carol did not touch her withholding from Social Security or her small pension all year long. Why would she? She figured this new deduction would more than wipe out whatever she owed. When Carol sat down with a tax preparer earlier this year, the numbers did not match what she expected. Not even close. The senior deduction did lower her taxable income. That part was true, but it did not change the separate, existing rules that determine how much of her Social Security benefit becomes taxable when combined with her other income. Those are two completely different systems working side by side. Carol still owed federal tax, and because she had not adjusted her withholding at all, she ended up owing more than she had set aside, right when money is already tight for a lot of retirees. I want to be very direct about this, because a lot of channels get it wrong, sometimes on purpose, because it gets more clicks. This new deduction does not eliminate taxes on Social Security. It does not touch, change, or override the formula that decides whether your benefits are taxable in the first place. What it does is reduce your overall taxable income, which can lower your final bill. But if you have pension income, IRA withdrawals, part-time work, or investment income stacked on top of Social Security, this deduction might help, but it is not going to erase your tax bill entirely. Assuming it will can leave you badly underprepared, exactly like it did for Carol. Here is why August matters so much for this one. If you make quarterly estimated tax payments, meaning you are not having enough tax automatically withheld, your next payment deadline is coming up on September 15th. That gives you a window right now, this month, to sit down and find out whether you are actually on track. Pull out your most recent Social Security benefit statement, along with any pension or IRA withdrawal records you have so far this year. Add it all up. Then either speak with a tax professional or use the IRS's own withholding tools to check whether you are likely to owe money when you file. If you find out you are behind, you still have time before that September deadline to make an estimated payment or adjust your withholding before it becomes a much bigger problem in April. And this next one could affect your wallet directly. Because our fourth update is breaking news. This is not something buried quietly in a government file for months. This happened days ago, and it could directly affect which doctors you can see and how much your coverage costs starting next year. So what exactly is this change, and why should you be paying attention to it in August instead of waiting until the fall like everyone else? Now, here's the part that matters most. If you have a Medicare Advantage plan, you already know that every year insurance companies can adjust their plans. They can change premiums, copays, and which doctors are in network. But every so often, an insurance company decides to walk away from certain markets entirely. That means your specific plan may simply stop existing where you live, whether you like it or not. This is happening right now with one of the largest Medicare Advantage insurers in the country. Just last week, on an earnings call, the company confirmed what they are calling targeted plan exits for 2027. That means They are pulling their Medicare Advantage plans out of certain counties and states completely. This single announcement is expected to affect roughly 600,000 members, and industry experts believe other major insurance companies are likely to announce similar exits in the coming weeks, because rising medical costs are making some regions far less profitable for insurers to keep operating in. Let me tell you about a retiree named Harold from outside Knoxville, Tennessee. Harold has had the same Medicare Advantage plan for 6 years. He likes his doctor. He trusts his pharmacy. He has never once had a reason to think about switching plans. But this year, Harold's plan happens to be one of the ones being pulled from his county for 2027. If Harold does nothing, he will not simply lose coverage overnight, but he will either be automatically enrolled in a different plan, or he will need to actively choose a new one during open enrollment. And that new plan may not include his current doctor. It may not include his current pharmacy. Harold will not know any of this unless he actually reads the notice his plan is legally required to send him. Every Medicare Advantage and Part D plan must mail what is called an annual notice of change by September 30th. This document lists every single change coming to your plan for the following year: premiums, copays, deductibles, which drugs are still covered, and which doctors are still in your network. If your plan is one of the ones exiting your area, this notice is how you find out. Do not treat it like junk mail. A plan that worked perfectly fine for you in 2026 may not even exist for you anymore in 2027. Open enrollment for Medicare runs from October 15th through December 7th. That is when you can actually make changes for the following year. But the smart move is to start paying attention right now, in August, because plan exits are already being announced, and the more lead time you give yourself, the less likely you are to end up rushed into a decision in December with the clock running out. Here is a simple way to protect yourself if you are worried your plan might be affected. Call your plan directly and ask one straightforward question. Is my specific plan being discontinued or exited from my county for next year? You do not need to sit around waiting for the mail to find out. A 5-minute phone call this month can give you a head start of a month or more over waiting for your annual notice of change to show up. And if you do learn your plan is being pulled from your area, you are not left without options. You can compare other Medicare Advantage plans in your county, or you can look at moving back to original Medicare with a separate Part D plan and possibly a Medigap policy. Neither choice is automatically better. It depends on your doctors, your medications, and your budget. But you cannot make a good decision in December if you only find out you needed to decide weeks earlier. But the fifth change is different, because our fifth and final update ties directly into what we just talked about, and it affects something almost every single Medicare beneficiary depends on every month: your prescription drug costs. So what exactly is changing here, and why does it matter for your wallet specifically? So, let's look at what this means for your money. For the past couple of years, there has been a temporary federal program helping to keep Part D prescription drug premiums more stable and more predictable. It is called the Part D Premium Stabilization Demonstration. In plain language, it has been a cushion protecting your monthly drug plan premium from rising too sharply, too fast. That cushion is going away. The federal government has confirmed it is ending this temporary program after 2026. Starting in 2027, insurance companies will be setting their own drug plan prices again, without that extra support behind them. The baseline premium the government uses in its calculations is rising from $38.99 to $41.33. Now, that jump might sound small sitting there on its own, but remember, this is just the baseline. Individual plans can and do stack their own price increases on top of that number, and some of those increases end up being much larger depending on your specific plan. Here is an important distinction, because this is exactly where a lot of channels get sloppy and scare people who do not need to be scared. This change mainly affects standalone Part D drug plans, the kind of plan you buy separately if you are on original Medicare. If your prescription coverage is bundled into a Medicare Advantage plan, the impact is usually much smaller, because those plans are priced differently. So if you are on original Medicare with a separate Part D plan, This is the one to watch closely. If your drug coverage already comes bundled through a Medicare Advantage plan, it is still worth reading your notice carefully, but you are far less likely to see a dramatic jump. Let me tell you about a retiree named Eleanor from a small town in Arizona. Eleanor takes 4 different prescriptions every month for a heart condition. She has kept the same standalone Part D plan for years because it has always been affordable and reliable. Eleanor does not follow the news closely, and right now, she has no idea that the pricing support behind her plan is being phased out completely. When her annual notice of change arrives later this year, she may see a bigger jump in her premium than she has ever experienced. And if she does not compare it against her other options, she could end up paying significantly more in 2027 for the exact same coverage she has always had. Here is the important part. The federal government will not release the final official 2027 premiums until mid to late September. So right now, in August, we do not have exact numbers for every individual plan. What we do know for certain is the direction things are heading, and that direction is upward. This is exactly why August is the right time to start paying attention, instead of waiting until your annual notice of change shows up and catches you completely off guard. When those final numbers are released in September, that is your cue to sit down, compare your current plan against your other options, and make sure you are not paying more than you need to for the exact same coverage you already have. Think about what this actually means over a full year. Even a modest premium increase, landing every single month without exception, adds up fast. A few extra dollars a month does not sound dramatic sitting here in August, but multiply that across 12 months, and across every senior on a fixed income doing the same math at the same time, and you start to understand why this change is already making headlines, even before the official numbers even exist yet. The smartest thing you can do is not panic over a number we do not have yet. It is simply to build the habit of comparing your Part D options every single year during open enrollment, instead of assuming your current plan is automatically still your cheapest option. The plan that was the best deal in 2025 is not guaranteed to be the best deal in 2027. Now, before we wrap up, I want you to notice something these 5 updates all have in common, because this is the real lesson hiding underneath today's video. None of these 5 things are secret. They are not buried in some file nobody can access. But none of them are the kind of thing anyone calls you about either. No one is texting you to say, here is exactly what changed this month. You are expected to already know. And most seniors simply do not. Not because they are careless, but because nobody ever explained any of it to them in plain language, until now. Here are the mistakes I want you to avoid this month, because each one of them has already cost someone real money. First, do not assume a missing SSI deposit means something went wrong with your case before you actually check your payment history. Second, do not set aside any letter from the Social Security Administration without opening it, even if it looks routine, even if it looks like junk mail. Third, do not assume the new senior tax deduction means you owe nothing at tax time. It lowers your taxable income. It does not erase the separate rules for how Social Security gets taxed. Fourth, do not wait until December to think about your Medicare coverage if you have heard your insurer is pulling out of certain markets. And fifth, do not assume your Part D premium will stay the same next year just because it has for the past few years. The support that has kept it stable is disappearing. So let's put all 5 of these into one simple action plan you can actually use this week. Number 1, log into your My Social Security or My SSI account today and confirm your actual payment history for July and August. Number 2, open every single piece of mail from the Social Security Administration the same day it arrives, and if it mentions extra help or a periodic review, respond before the deadline listed. Number 3, pull your Social Security benefit statement and any pension or retirement account records, and check whether you are on track for the September 15th estimated tax deadline. Number 4, watch your mailbox for your annual notice of change, due by September 30th, and read every word of it, especially if you have heard anything about your insurer exiting your area. And number 5, mark mid to late September on your calendar as the moment official 2027 Medicare drug plan premiums get released, so you can compare your options before open enrollment begins on October 15th. None of this requires panic. It does not require a lawyer or a financial advisor sitting across the table from you. What it requires is exactly what we just walked through together. Check your actual dates instead of assuming. Open every letter the same day it arrives. And take a few minutes this month to look honestly at your numbers before a deadline sneaks up on you when it is already too late to fix. If today's video helped make sense of something that felt confusing, do me a quick favor right now. Share this with someone you know who is 65 or older. A parent, a neighbor, a friend from church. Anyone who depends on Social Security or Medicare the way you do. A lot of these updates never make the evening news. And honestly, most seniors only ever hear about them from each other. One share from you, right now, could be the reason someone else does not get blindsided this month. And if you found this useful, make sure you are subscribed to Robert Preston Updates and turn on that notification bell. Every single week, we break down exactly what is changing with Social Security, Medicare, the IRS, and your retirement money, in plain language, without the confusing government paperwork standing in your way. I will see you in the next one. Take care of yourself, and take care of your money.